Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so you guys ever watch the Peanuts cartoons? Some of you might be too young, but for those of you that aren't, I want everybody to have in mind Lucy, Charlie Brown, and the football. So Charlie Brown always wanted to kick the football. Why? I don't know. Who cares? But he always did. So Lucy would take the ball, set it up like he's going to kick a field goal, but then pull it away, and Charlie Brown would fall on his ass. And she convinced him every time that she's not going to pull the football away this time. This time's going to be different. This time I'm not going to pull the ball away. This time you're going to kick the ball, and it's going to go, and it's going to be good, and it's going to feel great. No, this is going to be different. I won't pull the football. Backs up, runs, she whips the ball away, lands on his ass. So what's my point? The shorts, you're Charlie Brown. The sustainable downside, that's the football. Lucy, well, those are the dip buyers. Anyway, they pulled the football again. Charlie's on his ass. They popped this thing from 36.50s all the way back up through. You can see it here on the daily chart a little bit. There's the 50-day. You can see the daily mid-band and the 9-day, the two areas that they really had to hold. I mean, even if it was all coming apart, they really had to hold it. But you had two things last night. You had news out of China that China wants everything to be nice, and then at the same time you had news from the president about the stimulus package when it looks like that's going to happen. So they really used that to just take the market and just ramp it. So here on the hourly chart, you can see they had them Sunday night. They let them up. They tried to hold weekly pivot. There was your open. We lost weekly pivot here. They tried to hold the 77.78 area, which was fine because it held it Friday. Okay? So the pre-FOMC price held here and here. So for us, it was it was a great way to start the month. It was some really good trading. We had, the afternoon was a little choppy, but we got in a great long from down below, and we were in a couple of shorts, and the last one looked real good. We grabbed 10, and I told everybody, look, just leave the 2/3. We've done about 60 handles today. Leave the 2/3, leave it alone. Just leave it. Don't mess with it. Well, the first shot across the bow was them winding it back there. Here's the news, what came a little bit after 8 o'clock. They leveled it off, they've taken up over the top, and now they're trying to convert the 9-day resistance, 20-day resistance area into support. Whether that's going to be sustainable through the regular session today is going to be what today is all about. So, you get the shorts all amped up, you tell them it's going to be different this time, that they're going to be able to take it down through multiple days. Look, Mike, we even did the thing that you told us that we had to do. We stayed below the 2 lines, and we did it for a whole Globex. See what we did? Yeah, you did great. And then you went ahead and blew it. They pulled the football and you fell down again. So where we close today relative to the daily mid-band and to a lesser extent the 9-day is going to be really important. Look, you can have the mother of all multi-day bear market rallies. We're not even in a bear market yet. I think we've gone down a grand total of what? 36.50. We haven't, from 38, we haven't even gone down 5%. So I use the term bear market rally simply to indicate, one of these short covering rallies. So you can have a multi-day. Let me change the terminology there because we're not in a bear market. We're in a freaking flaming bull market. You can have a multi-day short covering rally, but that multi-day short covering rally, it's okay for it to overshoot, but when the day comes that it has to hold above the main inflection point. And the main inflection point here is the green line, the 20-day simple moving average, the daily mid-band. That has to hold today. The bears are out of chances. If they don't, then you're going to get up into this 38.20 area. which is here. And then you know what? There isn't a whole hell of a lot left to do, except go take out the highs. I'm not saying that's going to happen today, but if if they don't get it together, it'll happen this week. So, what you've got, the undertone, at least to me, is you got a lot of FOMO, but you've also got a real inability to put cash to work. And I think they wanted this pullback to put cash to work at the beginning of the year. And if that's all the pullback they're going to get, and we're heading higher, then they'll just put the cash to work anyway. And then, that in and of itself, 38.62 doesn't have a chance. So the Bears, the clock is ticking. Tick-tock. The green line has got to hold. They got to close below it, preferably push below the pre-FOMC price, and then they got to spend tomorrow trying to get some of these main areas back. But look, these aren't just, whatever lines. Monthly pivot wants to be support. That's significant. 50-day could not convert. Weekly pivot. These are not just random lines on the chart. These are large intermediate term markers that demonstrate tape control. And the biggest one of all is the 20-day. So 1, 2, 3, 4, going on 5 if you include the 9-day, areas that have been broken. And if they all turn into support, we head higher. All right. Everybody have a fantastic day. Be safe, be healthy, take care. Trade them well. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.